Yesterday wrapped up what is historically the worst month of the year for equities, and all the major indices ended higher and had their best September in over a decade. The S&Ps ended September with the strongest first 9 months of a presidential election year on record. And while markets did move higher, so did implied volatility in CME's option markets. Now that the calendar has flipped to October, what is in store? Well, pressure today from an escalation in the Middle East, but markets are well off their worst levels of the day. The Dow had traded under 42,000 before rallying back a bit. S&Ps were down about 80 points or so, and the Nasdaq was down almost 400 points. Crude prices moved higher, with West Texas almost hitting $72 before pulling back considerably. Earlier today, the Labor Department had the JOLTS report, and it showed that new positions rose to just over 8 million, an increase of 329,000 and much better than expected. ISM manufacturing was unchanged for September at 47.2%, which was slightly below expectations. And now all eyes are focused on this Friday's September non-farm payroll report. ES option data, today's expiring 5725 and 5700 puts, very heavy activity, as well as today's expiring 5775 calls. Also standing out is volume for this Friday, the end of week, 5700 strike puts, over 12,000 of those. At the money, ES implied vol rises to 18% out to Friday. That dips back to about 14% Monday. Short-term option volume continues to expand. Over the last 5 trading days, 65% of all ES option volume traded are options expiring within 5 days. And news from the CME. Beginning trading on Monday, October 28th, pending regulatory approval, the CME is expanding its suite of Nikkei 225 futures with the addition of yen and US dollar denominated micro Nikkei futures. The launch of micro Nikkei futures also marks 20 years since the listing of the first Nikkei futures contracts on CME Globex back in 2004.